America has weathered recessions, crashes, and pandemics, but the greatest threat to your bank account might be sailing quietly through a strip of water you've never visited. The Strait of Hormuz, barely wide enough to see both shores at once, funnels a fifth of the planet's oil. One chokehold there, and the chain reaction reaches your wallet faster than any missile can reach its target. Today, we're unraveling how a far-off clash with Iran could detonate gas prices, torch your savings, and push entire neighborhoods onto the streets. Keep watching, because the first warning won't come from the nightly news. It'll come from the total on your grocery receipt. Picture the narrowest lifeline of the global economy. A stretch of sea flanked by desert peaks and Iranian patrol boats, 21 miles at its skinniest point. Every sunrise, tankers worth billions glide through that gap. Now imagine those patrol boats dropping mines overnight and broadcasting one message: nobody sails until we say so. You'd feel the ripple before the headlines hit. Oil traders thrive on rumor, and a single blockade threat could shove Brent crude to $130 a barrel before you finish brewing coffee. By the time you fill up, the pump blinks past $5 a gallon and won't stop climbing. That extra $2 doesn't just punish your commute, it bakes into every avocado, hoodie, and phone case that moves by truck. Remember 1973's embargo? Lines curled around blocks, ration punches cluttered glove boxes, and inflation shredded paychecks. A straight shutdown would make that look quaint. Tankers idle in safe harbors, insurers yank coverage, and energy giants scramble for routes that add weeks and millions to each voyage. But the real gut punch lands in aisle 7. Diesel spikes, trucking firms tack on fuel surcharges, and suddenly a carton of eggs costs $1 more than yesterday. Expensive gas is only the spark. The inflation monster is already stirring, and it's about to claw at every dollar you own. Energy is the heartbeat of every product, from electricity that lights factories to diesel that powers 18-wheelers. When that heartbeat races, prices everywhere pulse higher. Economists call it cost-push inflation. You'll just call it budgeting pain. Start with transportation. A 40-foot container from Shanghai to New York already costs roughly $4,000. Slap on war risk premiums and rerouted voyages around Africa, and that same box could punch past $6,000. Those fees don't vanish. They hitch a ride all the way to the checkout counter. Now add utilities. Natural gas-fired plants pay more to keep turbines spinning, so power companies nudge their monthly statements north. You're paying extra to keep the lights on and to buy the milk in your fridge. Historically, the Federal Reserve shoots for 2% inflation. A full-blown oil shock could shove us into 8 or 10% territory. To wrestle prices down, the Fed has one blunt weapon: raising interest rates. But when rates jump, mortgages, car loans, and credit card APRs rise in lockstep, squeezing households from both ends. Prices spiral upward, borrowing costs rise, and paychecks suddenly feel 2 sizes smaller. And that's when the roof over your head begins to wobble. Housing already eats the largest slice of the American budget pie. National rents just crossed $2,000, with coastal cities hovering near the stratosphere. Layer higher utility bills and spiking mortgage rates on top, and landlords pass every cent to tenants eager simply to stay put. If 30-year fixed mortgages leap from 7% to 9 or 10, the average buyer loses tens of thousands in purchasing power overnight. Would-be homeowners stay renters, competition tightens, and leases ratchet up another 15 to 20%. History shows a grim link. Every 1 percentage point jump in rent adds thousands of people to shelters. Cities from Phoenix to Philadelphia have already seen homelessness surge 30% since 2022. With energy-driven inflation lighting the fuse, analysts warn another 250,000 Americans could be forced from their homes within a year. When shelter becomes a luxury, the dominoes fall quickly, right into your retirement nest egg. Because soaring living costs don't happen in a vacuum, they siphon the lifeblood out of markets next. Financial markets fear 2 things: uncertainty and oil shocks. A prolonged conflict in the Gulf gives them both. During the first Gulf War, the S&P 500 slid 17% before stabilizing. Today's more globalized, algorithm-driven markets could spiral further. Some risk desks model a 30+% correction if the strait closes for months. In panic mode, investors flee stocks for so-called safe havens: gold, dollars, treasury bonds. If your 401k leans heavy on equities, a sharp sell-off could vaporize $15,000 from the median household's retirement balance practically overnight. Airlines, cruise lines, and retailers take the hardest blows, while defense contractors pop, though their bounce rarely compensates for a broad-based rout. Diversification cushions the impact, but nothing fully shields a portfolio from a systemic shock. And if markets are gasping, supply chains are already on life support. Most of the planet's goods still travel by sea, and the Strait of Hormuz isn't a single commodity lane. Container ships crammed with electronics, pharmaceuticals, and auto parts navigate the same waters as oil tankers. Turn the corridor into a war zone, and insurers quote premiums so steep that captains detour thousands of miles rather than risk it. Rerouting a ship around the Cape of Good Hope adds 10 to 14 days to Asia-Europe voyages, and tens of thousands of barrels of extra fuel. Just-in-time inventory management melts under those delays, leaving store shelves patchy and assembly lines idle. Remember early pandemic toilet paper panic? Picture that, but for crucial medications, spare car parts, even baby formula. With shortages come price spikes. A container that cost 20 grand at the height of the pandemic could match or exceed that number again, inflating the price tag of every imported item. But freight chaos is only the visible scar. Hidden wounds keep bleeding long after the guns fall silent. Wars aren't one-time expenditures, they're compounding interest nightmares. The Iraq conflict's direct bill sits above $2 trillion. Factor in veteran care and interest payments, and estimates clear $6 trillion. A clash with Iran, boasting a larger military and regional proxies, could rival those sums. How does Washington fund that tab? Debt. The national ledger already tops $34 trillion, and each trillion added swells the annual interest line in the federal budget. Dollars that might have resurfaced crumbling bridges or modernized schools instead service war-borne IOUs. Investor confidence also erodes. Foreign capital hesitates. Global growth sputters. And even after ceasefires ink, energy remains pricey because shipping lanes stay militarized. Higher baseline costs settle in like permanent weight on the economy's chest. So if the storm seems unavoidable, how do you brace your finances against the blast? Stack an emergency fund, 3 to 6 months of essentials. Sitting in a high-yield savings account you can tap instantly. Liquidity beats panic. Audit your debt. Variable-rate credit cards and HELOCs bleed faster when interest rates spike. Prioritize paying them down. Diversify smartly. Blend assets that perform differently under inflation stress. Think Treasury inflation-protected securities, broad commodity ETFs, or modest gold exposure. Revisit risk tolerance. If you're 5 years from retirement, a 90% stock portfolio is a cliff edge in disguise. Shift gradually while markets are still calm. Stay informed, not alarmed. Follow reputable economic outlets, ignore rumor mill clickbait, and make moves only when data supports them. Most crucially, act before the headlines scream. Preparation buys options. Procrastination rents stress. Wars are sold as clashes of armies and ideologies, but you feel the first blast where the battlefield is invisible. At the pump, on your rent invoice, inside a shrinking paycheck. The Strait of Hormuz may be half a world away, yet its currents feed directly into your daily life. The fuse is lit, but it hasn't reached the powder keg, yet. Build your buffer, trim your risk, and keep a clear eye on that narrow strip of water. Because when distant conflicts ripple across oceans, they don't stop at the shoreline. They land squarely on your doorstep.